We're going to share a couple things about Wall Street and why I left Wall Street, why I stopped being a financial planner. So I'm kind of, maybe some of you have heard that story, but maybe we'll dive into some other depths of it. All right, so we're going to go ahead and get started since it's 12:03 according to my clock. So, why I got into Wall Street was kind of interesting, right? Because I grew up poor and then really wanted to figure out money. I was bound and determined to figure this out. And I thought I did, right? Hey, it's become a financial planner, learn about investing, and then go find clients, teach your clients how to do it. And while your clients are doing it, the money you make, then you invest in Wall Street and we all get rich together, right? That was kind of the dream in the beginning. But the reality isn't really like that, right? So the reality is most of these financial planners don't know really anything about how to make money on Wall Street. They are the middlemen, right? They take your money and they give it to somebody else. They're just salespeople. Now, they might prepare or have somebody else prepare a really cool proposal, and those proposals really are all lies. So it's you need about this amount of money in your nest egg when you decide to retire. And if you put away this amount of money per month and you get this rate of return and you do it for this long and taxes do this and inflation does this and all of this, if all these stars line up, then you'll have this lump sum money. And if you can get this rate of return on that money for the rest of your life, then you'll have plenty of money to survive your whole life until you die. And they use things like Monte Carlo method, everything else. It just didn't, in the beginning, it seemed right. It seemed like this is what you do. This is what people do. And I didn't know any better. I didn't know anybody with any money. So as I started to build my practice and I started to talk to business owners and more business owners and more business owners, because I was really working kind of those blue collar millionaire people that own businesses off of Santa Fe, mostly in Denver, Colorado. And these people were welders and plastics formation shops and those kinds of things, right? They would have t-shirts on and ripped jeans, and they were making more money than the doctors and the lawyers that my counterparts at the firm were going after. But I built this up to $700 million under management, and I was charging 1%. So that's pretty good, right? I thought I was making a ton of money. I thought everything was going great. But really what happened was my job was just to kind of take care of the clients, not really, and convince them that the stay and hold, stay the course, dollar cost averaging. I'd use things like, buy and hold, we're in this for the long haul, these kinds of strategies, these things. And it just, after a while I was thinking, but this isn't how these people made this money. We're just trying to hold on to it. Aren't we supposed to grow it? Some of these people needed to grow this money. They needed to double, triple, and they needed to put more money in every month or every year. And so to hit these goals that we both created this facade of what might happen, a lot of things needed to line up. And after about 10 years, that's kind of when I hit that 700 million mark. And so for the next 5 years, it was really taking care of those clients. We didn't need a lot more clients. We just needed to take care of the clients that we had. But when I figured out that that's not how these people made money, and it's not how people really become wealthy, is I felt like that feeling when you feel like if what you thought was true turned out not to be true, and you kind of feel a little bit like betrayed. You kind of feel like, oh my gosh, this doesn't work. It's 4% and they think it's 9.38%. The math doesn't work. All of the math doesn't work. So there's no hoping anymore. The math doesn't work. It's just math, right? So I'm on Wall Street and really thinking, well, I'm going to go buy some businesses, because I learned over those 15 years how to run a business from my customers, and watching them and observing, and the good times and the bad times, the challenges, the victories, the light bulb moments, the red letter days, and the struggles, and the businesses that didn't make it, and the businesses that grew and grew and grew, right? And so I thought, I'm just going to do that. And that's where and then I met Nelson Nash, right? But so let's just back up for a second. What I found on the other side of Wall Street I'm glad that I had that experience because when somebody says, well, Jim, you can do that in Wall Street or you can build this or that, I know that that's just not true, right? I mean, it's not true. By the way, I do have a client that makes $2 or $3 million a year trading his own investments in Wall Street, but he's an incredible math guy and he has a system. I mean, he's not even 1/10 of 1% of the people that put money on Wall Street. Not even, I mean, he's way, way, way higher than that, right? And his system works. But, you know, unless you know how to do that, and this guy's kind of a math genius, and I'm not. So I don't try to do what he does. I wouldn't give him money. He doesn't take anybody else's money to do that. So there are ways to make a lot of money on Wall Street. It's just not mainstream. It's not what they're telling you to do with your money. And you're really chasing crumbs when you do that because you're getting what's left over when you should control the bakery, right? It shouldn't just be the crumbs. So let's just talk about Wall Street first, and then we'll talk about kind of that breaking point where I just left. I could have got a lot of, and this may be a regret, but I could have gotten a lot of money for that firm. And I just kind of walked away. I was so disgusted with the whole thing that I thought if I made money from selling it to somebody else, then, I mean, if they were in the business, then I guess they understood. It was a quandary, right? And probably left a lot of money on the table. But what Wall Street really is, it's the illusion of control. Because you think since you give your money to somebody and you could fire them whenever you want to, that and you are the boss, you know, that they'll say, I work for you, you know, it's a facade, right? They get you at the jargon. Buy and hold, stay the course, dollar cost averaging, average rates of return. But behind the scenes, it's a casino. If you really knew what was happening, you wouldn't put your money there. You're the house's favorite player. Now, you're always betting and never winning. That's perfect. If I'm a bookie, I take your bet every week. And that's what they are. They're kind of like bookies because average rate of return does not equal actual rate of return. And I'm going to give you an example. Let's say we had $100,000, right? And some of you have heard me say this example before. In the first year, we're only going to go 4 years, by the way. So the first year, you make 100% positive return. So how much money do you have? 200,000. The next year, you lose 50%. You're back down to 100,000. The third year, another good year, you're up 100% again. Really good. You're back to 200,000. Now, the fourth and final year, you lose 50%. You're back to 100,000. Okay, you started with 100,000, you're at 100,000. What's your average rate of return? Now, don't say zero because it's 25%. We went up 200% over those 4 years, and our losses were 100%. So that's 100% positive divided by 4. Our average rate of return is 25%. What's our actual rate of return? 0. What's our CAGR, compound annual growth rate? 0. And by the way, is it 0? Remember those fees I was telling you about? How about taxes? All of that? That will erode. I mean, you're worse than 0, worse than actual rate of return 0. So, you know, you have that. Then you have these golden handcuffs and big firms, you know, groom you to sell products, not create wealth. And what they do is they don't teach you how to be free. Like Morgan Stanley isn't going to teach you how to be free. And they teach their advisors how to keep your clients dependent. You want to tell them how much they need you, right? So my breaking point was that I realized that every wealthy business owner that ever worked with that built their own wealth. Like they built their wealth. I mean, they had some of them 20 million, 50 million, $100 million, right? All of it was through their business and real estate. None of them, not one, was stock market. Not one person had $50 million with somebody else who's an advisor, brought it to me and said, I made that $50 million with that other person. Now, I didn't make anybody $50 million. I didn't make anybody probably $10 million. Well, maybe more than $10 million. Some of them had, like I said, if you had 100 million, you know, at 4%, we could get you to, get you a $10 million increase. But again, I'm getting paid 1%. That's pretty good, right? I was helping people save money, build nest eggs, but not have freedom. And I realized because I was doing pretty well financially that the one thing that I didn't have was freedom. I had to take care of those clients whenever they called. If I'm on the golf course and a big client calls, I got to say, hey, hold on a second, guys, I got to take this call, right? If it was 7 o'clock at night and one of my big clients were calling, I had to answer the phone. Well, I didn't have freedom. They didn't have freedom, but I couldn't lie to myself anymore. This was not what people should do with their money. And it's what the majority of people are going to do. And I don't want to talk to the majority. And I decided that I was switching from majority and herd to people that wanted to be free just like me. And it was a lot smaller audience, I can tell you that much, right? If I wanted to talk about the latest, greatest investment for this week, where to put your money this week, I could get 200 people on this call and not think twice. My Money magazine used to come out in January. The mutual funds you must own this year. Do you know that if you bought every one of those for 10 years, or rate of return was minus 17%? This is Money magazine. That was a big deal back then. Not everybody, but a lot of people read Money magazine. And they were telling you what to do with your money. If you followed them, you would have lost 17% over 10 years in a really good market. So again, the lies. So how's wealth really built? What I found was wealth was built with control. I was just looking at a business today, another FedEx delivery business. I mean, it seems to like for the next 10 years, that business should be great. And I can't count on, when I buy a business, I'm not counting on it being there for 50 years, right? A lot of businesses, big businesses that were here 50 years ago that were big. Think about US Steel, those kinds of companies, like they're gone, right? Blockbuster, that's a great one. So you need control, and wealth is built with control. Whoever controls the money makes the money. You don't need permission from the Fed, Wall Street, or some market analyst. You need leverage, right? Leverage. And how do you get leverage? Well, you have your own banking system and you have cash flowing assets. Those two things together and helps you create leverage. Seller finance creates leverage. So when I found infinite banking and I met Nelson Nash, instead of parking my money in somebody else's vault, I built my own. Notice I didn't say I built my own overnight, because it didn't happen overnight. Nothing really good in life happens just instantly. I mean, unless you get really lucky. But the policy cash values grew and grew and grew. Those were my savings accounts. I had control and I had compounding. And I could leverage that money anytime I wanted to. And I found cash flowing assets, businesses, real estate. I bought over 30 businesses using this system. Now, I don't own all 30 still. I mean, I own like 20 businesses currently, and like 13 of those are in the crypto business, and they're mining companies and this project and that project. And, they're little companies that produce money 24 hours a day, 7 days a week. Those cash flowing assets are easy, right? I don't do anything, right? So now I have time freedom. I have money coming in, so I have financial freedom. And I was watching the US Open a few weeks ago with a friend of mine who owns a golf store. And they're really the golf store is so unique because I don't know if anybody's a golfer on this call, but if you needed your clubs gripped, normally you would take them up to the golf shop and you would pick them up 3-4 days later at best. There, they'll change them in 20 minutes. I mean, it's just, and they have every club that you could think of, like every brand, every model. So it's a really good business, and it's been there for 27 years. And this guy's 50 or 51 years old. And one of the younger partners he's kind of the middle partner. There's an older guy close to 70. And one of the younger partners is building the online presence. So while we're sitting there having a beer and watching the US Open, he made 4 sales and he was so excited. And he said, "This is what you talk about." I said, "Yeah, you're making money 24/7. People are buying things 24/7. You just got to get more inventory up there, better marketing, better this. And that little notification on your phone will be going off, ding, 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 right? You'll probably turn it off because it's going off so much. That's a good problem to have. So where is that for you? I don't know. Invest in what you know, right? That's what I did. I didn't actually. I knew how to run the business, and I could talk to these business owners, and then they wanted to sell me part of the business, and they wanted me to be a partner because I had these ideas. I mean, Joe's on here. Joe runs several businesses. So, I mean, I guarantee you, either it's happened or it will happen. People come to Joe and say, "Hey, do you want to partner with me on this? Because you have a knowledge in this area, and this is our vision." So key shifts, like what were those shifts? We're talking about ownership. First shift, easy, shifting from spectator, consumer, client to owner, customer, not customer, owner. right? And you don't need to bet on stocks. Own assets that spit off income and grow in value. Seems simple. Simple's not, simplicity is elusive. Okay, so then shift two from chasing returns to building cash flow. Don't care what your balance is, care what your cash flow is. There's value in the assets that you own, right? You could add up the assets, and if you go do a PFS, they're going to make you do that and put the value in there. But the cash flow is what matters. Freedom isn't a number. It's not like a nest egg number. It's when your passive income exceeds your ideal lifestyle. Now, you're really free when it exceeds your current lifestyle. But would you be happy with that? Probably not, because people want more. Not everybody, but God didn't create you to be scarce. And really, when you're scarce, it's a little bit selfish when you're scarce, because you're keeping all your resources to yourself. When you have abundance, you have more than you need. Guess what? You'll share it. When you have more than you need on knowledge and ability and everything else, you'll share it. God wants you to share it. God wants you to share it and grow other people, serve other people, love other people. You can't fully love and serve people if you don't have abundance. Poverty, if you're in poverty, then you couldn't really give anything to anybody. Have that abundance mindset, not only for yourself, but for the things that are important to you, your church, your synagogue, the charities that you care about. If you don't go to church, you don't go to synagogue. That's not the message. The message is whatever you care about, right? So the other thing is, the third shift that you have to make is relying on banks. You got to become the bank. You have to become the bank. Banks win because they lend money and charge interest. Simple as that. So I became the bank. I stole that from J.D. Rockefeller, right? I became the bank. He says the banks were the biggest hindrance to my success, so I became the bank. All right, so 3 steps to kind of reclaim and do what I did and leave Wall Street in the dirt, right? Where they belong, is reclaim control. Stop giving your money to Wall Street. Build your own bank, right? What do banks do? They lend money. Okay, buy cash flow. That's what you want to go buy. What do I do with the money, Jim? Buy cash flow. Businesses, real estate, software, royalties, things that pay you now and forever, right? Forever. Think like an owner. Don't compete, right? Create value. Competition is not how, you build the game so that you control the game. And so to wrap it up, I didn't leave Wall Street because I was losing. But because I fully understood the game, I didn't want to win their game, right? I could have just collected the 1%. Now it's like 0.75%, but guess what? I could have added, it was still going to work mathematically. You know what I mean? It was like, I wanted to build my own game though, that I control. And now I help other people do the same thing. And I would not do anything else in my life. And I want to do it until I'm 120. Again, I just turned 60 on June 9th, and I say I'm halfway, right? So you can spend your life climbing someone else's staircase or someone else's ladder, like Wall Street, or you can burn it and build your own staircase to freedom. It's whichever one you choose. Both of them are hard. I talked to this lady the other day. She had lost 35 pounds. She was telling me what she was doing. I was at the chiropractor, and I said, good for you. That's so cool. I'm glad you have a system. She goes, it's not easy though. It's hard. And I said, I bet being fat was hard too. And she was like, excuse me? And I said, well, it was for me, right? And she laughed and she goes, it is hard because you don't like the way you look and your clothes don't fit and you can't do the things that you want to do. And I said, yeah, for me, being fat was hard and being in shape is hard. You get to choose your heart. I'll choose to be in shape and do the hard things because I feel better and I'm healthier and I'm going to live longer and I'm going to make it to that 120. So, and who knows, maybe beyond. Who knows what will happen? Can you imagine the medical breakthroughs in the next 60 years, even 10 years? The things that they're doing with nutrition, it's just amazing. Anyway, I hope that helps. Okay. Well, thank you all for being here, and Godspeed. Thank you all.